In the 20-plus years we have been in business, one of the things we know for certain is that the majority of people looking to buy life insurance are not aware that there are different types of life insurance products offered on the market that all perform differently from each other. Until you understand some of the basic differences between these plans, consumers just shop around to see which company will offer the most amount of coverage at the lowest rate, and that is how the majority of them end up getting into the wrong type of policy for what they are looking to accomplish in the event of their death. Unfortunately, it isn't until years later, when much older and not in the same health, people learn how their life insurance policy actually works. When it comes to protecting your family, there are many forms of life insurance policies offered on the market, and oftentimes can be overwhelming and very confusing to understand. In this video, we're going to keep this really simple and break down the difference between two of the most common types of life insurance policies consumers purchase, which is term life and whole life insurance, and these two life insurance policies are about as opposite as night and day. Term life insurance as the most affordable type of life insurance sold on the market. The reason why the cost of term life insurance is so much lower than all other types of life insurance is because it is a temporary policy. Term is the abbreviation for terminate, which means at some point the policy will eventually terminate or expire. The bottom line is that term life insurance is not a permanent life insurance policy that will insure you forever. Term life insurance is designed to give you a much higher or greater amount of coverage at a much more affordable rate. It is also designed to give you a temporary policy when you have a temporary need. Term life insurance can protect items like your home mortgage, years of lost income, college education for children, car notes, personal loans, medical bills, and other debts, so that burden isn't left on the surviving family and allowing them to continue with their current standard of living. Term life insurance is mostly offered to those from age 20 up to the age of 60 and typically purchased by those who have families or young children. There are two types of term insurance policies you can purchase. One type is good for a specified number of years, 5, 10, 15, all the way up to 30 years, depending on the company and the insured's age at the time of application. Once the policy is approved and issued, the rates are typically locked in for that period of time. Then there are policies that will cover you to a certain age, like to age 70 or 80. These policies are commonly offered through the mail from companies like Globe Life and AARP, and structured to where the rates can increase as you get older in 5-year age bands, 50, 55, 60, and so forth. The bottom line is that after you've had your policy for a specific number of years or attain a certain age, that's when the policy terminates. And because term policies are like rental policies, they do not build any cash value over time, which means you do not receive any portion of your premiums back when the policy expires. However, in most cases, they can be converted to a permanent policy at any time without evidence of insurability. What that means is, if you started with a term life policy, then later survived a heart attack, at any point afterwards, you could still convert your policy to a whole life plan without having to go through any medical underwriting. It is important to first review your product details to see if this feature is available in your proposed policy, because not all plans offer this feature. Whole life insurance is a permanent life insurance policy that is good for your whole life, regardless the company or the amount of coverage. Once a whole life insurance policy issues, it's locked in for life. Your rates will never increase, and your death benefit amount will never decrease. As long as you keep your premiums current, your policy will stay with you for the rest of your life. Whole life insurance also has a cash value component. It's a savings account that grows over time, tax deferred. You can borrow against it, withdraw funds from it during your lifetime, or even have it pay the premium when needed. However, whole life insurance comes with higher premiums than term life insurance because it provides lifelong coverage and is 100% guaranteed to pay out a death claim to your beneficiary at some point. Examples of when whole life insurance makes more sense is to cover items like funeral costs, taxes, loss of income like Social Security or a pension, and any remaining unpaid bills or debts. So, it's essential to consider your financial situation and needs before choosing between the two. You can also have more than one life insurance policy as long as they both accomplish your needs, eligibility, and budget. Death is certain and occurs daily. Whichever plan you choose, you must protect the people you love the most and keep the commitment to yourself and your family. Life insurance will never be any more inexpensive than what it is today, which is why you should apply now. In conclusion, term life insurance can be the most cost-effective way to get maximum coverage, while whole life insurance offers lifelong coverage and a cash value component. It's all about what fits best with your financial goals and family's needs. If you're under the age of 60 and term life makes the most sense, go ahead, apply now, self-checkout, and skip the agent. The application process only takes a few minutes and you will receive an instant decision once completed. If whole life makes the most sense, or you are uncertain and have questions, give us a call, or you can schedule a free, no-obligation and no-hassle phone consultation via our online scheduler. We look forward to helping you.